Hi everyone, welcome back to Village. Surprise, surprise, I managed to pull Sashwath out from his busy schedule. He's been very busy in his college and getting exams and things out of the way. He's managed to finally got a break from his studies. I thought I'd pull him into a conversation and have him talk about what's happening in the American market. And with Trump swearing in ceremony coming the 20th of Jan, right around the corner, that is not very far away, I thought it's a good time to talk about the future of the American market. Are we in a bubble in the American market? And is it something we should be concerned and worried about? If you are investing in the American market, and if you're waiting to enter the American market, should you wait and not enter the American market if there is already a bubble in place? So, Shashwat, what do you have?
Right. So, first of all, it's good to be back. And secondly, moving on to the American market, it has been on a positive trajectory for a while. And those of you who are subscribed to the Substack should know that we wrote an article very recently about this. We talked about American exceptionalism, where we write about how the US has been exceptionally positive in terms of the returns it has delivered for its investors. And along with the US, we also talk about companies, or rather stocks of companies from the east, that is even east of India. So we're talking about stuff like Japan. However, when we think about the US, the first thing we have to understand is that there are certain reasons as to why the US is performing as strongly as it is today. The US does have a lot of advantages going for it currently, which, and it has had these advantages for quite a while now, which has been working in its favor. So when you have a good idea, it's only natural that you end up seeing the market valuing that idea properly. So, for example, if let's say my uncle and I start a good business and this business is growing at 20% year on year, and we aren't leveraging way too much to get this sort of growth, most of us would agree and say, okay, that's a good business. Whatever we're doing selling XYZ product is going well because we have good margins. No one has eaten into what we're doing as of yet. So if we've done this for long enough, you might want to give us a good valuation because we have a proven track record. Now, instead of my uncle and I, imagine that we are instead running a country and name this country America. And the thing is, within this country, there are multiple other small entities, small businesses. So imagine one of our company, that is one company where we're selling XYZ product, multiplied by 20. Imagine there were 20 uncles and nephews running a business together in a particular region, and you had a chance to take a small portion of each person's business in terms of ownership. The question is, how much would you pay for it? And if all of them were giving you, very decent returns, then you might want to give them a higher valuation in general compared to other, let's say, regions or other similar setups. So this is how I would envision what is going on with America right now. It has a collection of companies that are performing very well. And if you look at the top, let's say, 20 big tech companies in the world, America must be dominating at least 85% of that list. You look at Nvidia alone, I mean, you already have a winner there. You have Nvidia, you have Apple, you have Google, you have Facebook, I mean, Meta now. You have, I mean, before they used to say Netflix, I think Netflix is still dominant, though there are other competitors. You have Amazon in the mix. So you have multiple different companies going for it, and they have good earning power. So, what do I mean by earning power? I'm talking about the fact that for the amount of assets they have, the amount of profits they're able to generate in comparison to that generally refers to earning power of the particular company. So, America has a lot of tailwinds going for it. The first thing being earning power, the second thing, technology, which right now America is at the forefront of. Even though there are players like China, Russia, India, Europe, no one is able to challenge the American dominance as of yet. And nextly, we also have another factor, which is that it is the reserve currency of the world. And if your currency is the reserve currency of the world, it's very natural that other currencies are likely going to depreciate against your currency. And yes, this may be seen as or a bad move for certain companies which are exporting, but in the long run, it gives you more opportunities to finance your debt cheaply. So if you want to raise money in the public market, it means that there's going to be a lot of people clamoring to, invest their dollars into your company because they need to put this money somewhere. If you convert your money into dollars, you need to put this dollars somewhere, and they're going to put it in, let's say, stocks of your company or bonds of the government. Either way, there's going to be a lot of funding in the market, and you're going to get funding for cheap. So this is another factor where funding costs are very low. So companies are able to leverage for very little money. Though very recently interest rates were raised, however, this hasn't made a big enough dent on companies' profits as of yet, because we see that these companies are still doing quite well in America. Finally, the last piece I would say of American dominance comes from the fact that, related to their currency being the reserve currency of the world, they have a lot of leverage in trading terms with other countries. So if you look at the continent of Europe, the European Union and the different countries inside Europe, they have very favorable terms of trade with America. America gets to dictate how they want to engage in trade with countries like China, Russia. Today, after the Ukraine war, America could declare sanctions on Russia and still be fine, because they have their own shale oil production within the nation. So they're not dependent on any necessary exports from other countries. So you have a self dependent nation which other countries are dependent upon. It's very natural that your country has a lot of tailwind advantages going for it. And this is what I can acknowledge is the positive side of the story. However, this does not mean that a stock market or an index cannot be in a bubble, because bubbles are generally good ideas carried too far. So, for example, if you look at the tulip mania, which is the classic idea of a bubble, yes, tulips look very nice and they have a purpose of serving, some sort of sentimental value to Dutch families. But the point here is that it's something which was a good idea taken too far, in the sense that trading in tulips after a point ends up becoming quite irrational and unnecessary, because no one was using those many tulips back then, which led to the tulip mania. And similarly, in modern day contexts, a good idea can definitely be carried too far, and that may be what we're seeing with America now. This doesn't mean that the American stock market is going to crash tomorrow, but there is a clear indication that maybe we need to consider whether we can continue paying the kind of premium we are for American companies as a whole. Because if you look at the PE ratio of the S&P 500, it is currently at close to 27, 28, which is definitely on the higher end of things. And I don't know whether such a premium is worth paying at the current point we are sitting at, with other options with lower valuations. So this is my judgment of what's happening. What do you think?
I agree with what you're saying. In essence, if you look at the American broader market, what you say is very true. But the thing, what I would add is, I would say this is the American market, and seldom good companies always seem to find a way to navigate these things. If you take even our FANG stocks, the S&P 500, if you remove from the S&P 500 these FANG stocks, the S&P 500 really is not gone anywhere. The bubble which we are seeing is very lopsided towards the tech side. And even the bubble in the tech side, sometimes in history, we have been thinking there is a bubble, but what it is actually a burst of energy which is entering the economy, and earnings actually start picking up. Earnings always comes a little slower than price. That's why stock prices are always chasing earnings, and that's why they always factor it in, analysts, because they've seen it in history. When the conditions are right, earnings will come. So they factor that in and they try to discount that, and the stock prices always go ahead of earnings. And this has happened in history. Right after World War II, the American economy had a boom. It looked very similar to this at that point in time, where there looked like a lot of people said there might be a bubble, because they just recovered from the Great Depression, the stock market crash, and they were sitting on that memory still, and they felt, maybe this is going to be a bubble, it's going to blow up on our face. But it didn't, because what Europe was, at the shape Europe was in, America was the only workhorse for the world at the time. There was no China at the time, there was no Japan at the time, and everything was on the US. Everything was made in the US, and it proved to be different. Are we in a similar situation when it comes to tech stocks? I believe so, especially when you look at what's happening in terms of computing power, what is happening in terms of AI. Yes, AI is still in its infancy. It hasn't proven anything. But at the same time, you cannot write it off to the other extreme too. So I would tell investors to be cautious, not to be over optimistic. At the same time, not to be superbly pessimistic. The tendency right now in society is the world is the way we're triggered is we either black or white, or you're blue or you're red. There seems to be sudden loss of the truth that most human beings live in the middle and our world functions in the middle. Thanks to social media, we have got a distorted view of reality, and that seems to have crept into our markets also. And that is something to keep in mind. But the flip of it is also what you say, there are things to be very wary of. In terms of salary and wages in the US, could be better. There is a disparity in the US between the rich and the middle class and the lower class. In the US, the middle class has been hammered out as much as in India, there's no more middle class. We're being pushed into extinction. Same is happening in the US. And one of the reasons why Trump won, there are many various reasons, but one of the contributing factors has been the economy. And the Democrats kind of missed the beat. Yes, they got inflation down, but they kind of missed it. They should have done a lot more to it, a lot sooner, and they could have done, but they kind of slow ponied it, and that has taken a toll on the middle class in the US. Affordability for the middle class in the US has gone nowhere in terms of wage growth and job opportunities compared to where housing prices have gone, and other things have gone, insurance has gone, and the staple of diet, like the cost of eggs, there's many memes and jokes about it in the US, has not helped the American public. So there is a huge distortion. And right now, Trump coming in, there is no clarity. A lot of what Trump says and a lot of what he does have no correlation. He seems to be a person who does a lot of things verbally, he says. Things actually transferring into actions and policies are very little. And we'll have to wait and watch. And as much as people are saying he's going to destroy the governance and government and all that, it's not so easy. Even the extreme picks he's got for his cabinet, some of them already dropped out. New ones which are coming in are not so keen on taking on the role. And most of the ones which are being accepted are already established guys, part of the establishment of politicians. So we have to wait and watch where this actually lands. And China has already started negotiations with his team about the tariffs. That's what the news is, that they're preempting. Why go to the point of having tariffs? Tell us what you want. They're telling the Trump team. Let's see how we can accommodate this, because they do realize he's going to be in his full strength for 2 years. Post that, he's going to become a lame duck president. And after that, the Trump era is pretty much over. They can move forward. While Xi Jinping has many more golden years ahead of him. So his problem with Trump is going to be very short-lived in his rest of his career as the president of China, so premier of China. So he's not worried about this Trump too much, other than getting through this next few years, which is going to be troublesome for him. But I would say more than the US domestic things, what is more worrying is what's happening in Middle East, the way the Syrian thing happened. And we have to wait and watch. No one really has a clue on what Israelis want to do, including the Israelis, because they could have never imagined they would have a position to be in Golan Heights the way they are, to capture portions of Syria the way they're capturing. So are they getting greedy? We have to wait and watch. And where does this greed actually land them into? We don't know. We'll have to. There's a lot of interesting points here, which will all have direct implications on the American market and its earning potentials and its capacity to keep growing.
I think that's why a lot of American stocks are doing so well, because if you want to be on the higher end of the return spectrum, then you have to go into American stocks, is the idea, at least what I can see, because they're considered the least risky option. However, I don't know whether, with growth going where it is, that is going nowhere, because American growth is also heavily stipulated. Yes, I mean, they have a very good consumption which comes from within. Domestic consumption is quite good in America. I won't deny that. However, I don't know whether domestic consumption in America can alone sustain the kind of growth that they're expecting from a company like Nvidia, or let's leave the Magnificent Seven, even the other companies which aren't part of the Magnificent Seven. For example, Johnson and Johnson, or any other company which is manufacturing in America, or not manufacturing in America, but rather an American company that manufactures wherever, and the profits go to an American firm. I don't know whether they can bank on the world economy being as strong as it was in the past 20 years. I think the world economy is definitely at a very precarious, I won't say weak position, but a precarious one. which looks very fragmented. And generally, as a student of economics, I have to say that being fragmented is never a good sign for growth. It may be a neutral sign for growth, but it can never be a positive sign for growth, because ideally, the larger your market and the more players there are in it, the better the outcomes are for all the players involved. That's the general idea of how it goes. So we'll have to wait and watch, like you said. And yes, you're right. Just because there are things going on doesn't mean that one doesn't invest. It's important that one keeps investing small amounts every now and then, because time moves on and you need your capital to compound.
Correct. And there are always pockets of opportunities. In the chaos of war, there are points in the battlefield where you can see positions which you can leverage, where find pockets of peace, and where you can dominate and you can enter and capture ground. As a general or as a guy in the front lines, you should be ready to see that. Standing on a hill, looking down, when you see opportunities, you should be able to move your flank, protect what you need to, and move in and capture position. And these things can sway matter of minutes and seconds. These things can sway either way. So being agile, being nimble, but most importantly, you should have confidence. I would say that's the most paramount thing as an investor you should have, is confidence in your knowledge, confidence in the process, confidence in your calculations and your whatever you've researched, and then keep batting yourself in. Most investors, they lack the confidence, and that lack of confidence drives into fear. Because if it's like flying a kite, you have to give it thread and you have to let that thing go slack for it to gain height. But when you do give it slack, you see the kite suddenly like doing like this and floats little down, and you have to know when to tighten and when to slack it so it pulls up and then starts going up again. Then you give it more slack. So it's investing in a stock market, especially like in the American market, it's like that. You need to know when to reel it in and when to stay in your so-called different coffee ranges, and when to go explosive and move into the lunch and dinner ranges. And that is your personal investment style, the way you do it. Like each person has a way to play an instrument or play a sport. You have a signature way of playing it. It's naturally, intuitively, it comes to you. Investing is also like that. It's very intuitive. So take all this information. It's wonderful to watch and process it. Take it as encouragement. But like Will Smith famously said, someone gives you an advice, do remember it's an advice from their perspective and their life journey. It really doesn't have any value to you, because he has not lived or she has not lived your life, and they really do not know where you're standing. So it's from their perspective, and it's completely covered in their judgment and is biased with their biases. So advice is great. It just tells you that someone cares about you. Someone is there for you. But end of the day, the advice which you should really count on is your self-advice, what you tell yourself, the inner voice. You should focus on that more, especially when it comes to investing, than anybody else. Like George Soros' famous pain in his lower back, or whatever they call it.
Pain in his lower back, yeah.
Yeah, so it's like that. You need to develop some way of knowing intuitively what's happening.
Yes, and if this information does put people at stress, then I'd say disregard it and just take away the fact that things may get bad, things may get worse before it gets better, but there are going to be opportunities. I mean, even in the Indian market, we've talked about a few stocks, and you are covering many stocks now and then on the channel. So I think that there are many pockets. So it's not a bad day to be a value investor.
So anyway, I hope you guys found this video informative and entertaining as always. It was nice to have Sashwath back on the channel after a long break. So there you guys go. If you've been wondering where is Sashwath? So there he is. And I'll try and pull him in again when he gets a little free time between his studies and his exams to do a couple of more videos with us before the year is through. Anything else you want to add, Sashwath?
No, good to be back. Hope to be back soon.
Yeah. So do enjoy your holidays, everyone. And we wish you the best. Merry Christmas and Happy New Year to all of you from Sashwath and me. And me and Sashwath will definitely catch up again with you guys sometime soon. Thanks for watching the channel. Do subscribe and like as always, and share it with friends and family who might find this content interesting. Nothing more else to say other than see you soon. Thank you.
Thank you. Hey guys, that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it. And we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu. And these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.